Guys, it's Royce Jacob. Welcome back to the channel, and in this video I want to talk to you guys about how I personally plan on trading through what I believe will be a second significant pullback in the equity markets. Alright, so to summarize this real quick, the two trades that we're going to be talking about today are put options or a short position on the S&P 500 and call options or a long position on the VIX, which is the Volatility Index. These are two pretty simple trades, pretty simple concepts, obviously if you understand them, but if you don't, that's what I'm here for. Alright, so we will cover those two today, and as always we will go over each topic that we're going to be discussing, and then we'll dive into each one individually. In front of us on TradingView, the SPX, we will be looking at both charts today, the S&P and the VIX on TradingView. So I'm excited to look at this, obviously cover both of these from a technical perspective. I will let you guys know what I'm thinking in terms of both of these, in terms of future potential price action. Obviously shorting the S&P, so I do think it's going to go down, and I am long the VIX right now, so we'll take a look at that, and I'll show you what I think is going to happen on the upside for that one. Okay, so again, we will take a look at both these on TradingView, get the technicals out of the way, but first, as always, you guys, you know the deal, we have to cover the fundamentals first and then dive into the technicals afterwards. So we will go over this quick article: stock futures fall with the market set to continue technology-led sell-off. So I just want to read you guys a key few, just literally just these paragraphs here, just to kind of preface what's going on in the market right now and what I'm thinking going forward. We won't just talk about this, but I will talk about many of the other things that I have been talking about on the channel for about the past week now, just all the bearish fundamentals that have led up to this point and why I'm still bearish on on the equity markets fundamentally. Okay, so after that, we will take a look at this article. I thought this was super interesting. Okay, and this plays right into the VIX as well. So Goldman Sachs says Wall Street's fear gauge is flashing a warning sign unseen since the dot-com crash in 2000. All right, and this is correlating the S&P and the VIX, so this plays perfectly. This marries these two plays into one right here with this article. Okay, so we will just quickly take a look over some of the highlights here, and then we'll get into the VIX, which is the Volatility Index. So this CBOE, Chicago Board and Mercantile Exchange, pretty much. I'm sorry if I got that wrong. I'm blank on that. But anyway, they are pretty much the guys who composed the VIX, who invented the VIX pretty much, and trade the VIX. Okay, so you can't actually trade the VIX specifically, although we are going to be looking at the chart today. There are certain plays that you can trade with the VIX, and we'll talk about that when we get to it. But again, we will take a look at this on the CBOE website themselves. I just want to show you guys these two segments of this page, talking about just kind of establishing what the VIX is. Again, if you guys don't know what it is, we will read through these two quick and just get an idea of what the VIX is and why it's important, especially in times like these. Okay, so after that, we will quickly take a look at this, you guys. I have brought this up before, but I just wanted to show this. We actually aren't going to go over this at all, but I want to show you guys this. I will link it down in the description, just because I want you guys to go into to this potential crash. Again, you guys always remember, I don't know if this is actually going to play out. I don't know if it's going to crash 100% or not. Obviously, no one does, but this is what I'm betting on, and if it does happen, I want you guys to be prepared. So I wanted to share this with you guys, just some technical patterns that you can look at for yourself. And yeah, I just wanted to share it with you guys pretty much. So link down below for this if you guys want to check it out, learn about some bearish patterns so that you can trade them if you choose to do so. Okay, so before we get into it, as always, I will ask you guys to please give the video a like if you do want to gain value from it. Subscribe to the channel if you're new around here. Help us get to 20K, please. And as always, check out my complete portfolio and daily newsletter if you want to know my exact call options, put options, how much of my portfolio they take up, and all the other ways that I'm hedging my portfolio and kind of attacking in a defensive way as we see what I believe, again, will be a significant pullback in the equity markets. Okay, so first link in the description if you're interested. If not, no worries. I do also want to kick off the video with something that I sent out in the newsletter this morning. So just one sentence, then we'll get into the rest of the good stuff. All right, the market works in cycles, and it was extremely obvious that we've been approaching a pivot point for the past few weeks now. All right, so again, you guys, over the course of this whole rally, if you guys have tuned in, if you're part of the Waves family, you would know that I've personally been very skeptical of this rally. You know that there's a lot of new retail interest. You know that there's a lot of money in this market that has inflated this market. And we will actually look at some of the institutional players like SoftBank in this article that we go over that have contributed to this monstrous rally in a time when the economy is objectively terrible. Okay, you guys know that the market and the economy are two completely different things. They've completely diverged at this point, but we might see if the market finally does catch up to the economy, because as I've been saying over the course of this whole rally, I feel just intuitively that it has to catch up at some point and become and regain that correlation once again at some point, and I do believe we might be seeing that now. Okay, so once again, we will cover this article quick and then dive into the charts. Stock futures fall with markets set to continue technology-led sell-off. CNBC, U.S. stock futures moved lower in overnight trading, pointed to losses at the open on Wednesday. As a technology-led stock rout continues to pressure financial markets, Dow futures dropped 150 points. S&P and Nasdaq 100 futures fell 0.5% and 0.35% respectively. Disappointing coronavirus vaccine news also pressured the futures market on Tuesday. AstraZeneca shares plunged in extended trading after the company said a late-stage trial of its COVID-19 vaccine candidate had been put on hold due to a suspected serious adverse reaction in a participant in the UK. So very bad news, you guys. I will probably do a stock talk on that biotech sector sometime this week, but it's really not looking good, you guys. Put options right now are the certain type of trade that I'm most bullish on right now, and it's kind of a bummer, but hey, that's this game, all right. So, shares the athletic retailer Lululemon. You guys remember I just talked about that yesterday. Might short it. All I'll say here is that my portfolio was very happy with that decision this morning. And messaging platform Slack fell in after-hours trading on Tuesday, despite both companies reporting better than expected earnings. So that's a big thing to remember as well, you guys, going into this. There's a lot of earnings coming up, and so many things are at all-time highs. Lululemon was a perfect example of this. Brick and mortar shop. I mean, that even though athleisure is growing, that doesn't mean business is good, okay? So, I mean, it's not necessarily that even business is good, and many of these tech companies that are pulling back right now are doing well as well, but things are just so inflated. Things are just like way beyond their all-time highs, like way beyond the highs that we were even at the beginning of the year. It's just a bubble, and I just think that it's about time the bubble pop, that we see a healthy correction. And once again, I do believe that the majority of the markets, they will continue to go up over time, but I do believe that, again, the economy will catch up with the markets, and I think that's happening now. So the sell-off in technology shares worsened on Tuesday as investors rotated out of companies that led the market's historic comeback from the coronavirus recession. So remember, you guys, like I mentioned just right here in the beginning in my newsletter this morning, what goes up must come down. Like, it's just that's not just the markets, you guys, that's life. So similar like just principles apply to both life and the markets. Obviously, it's the markets are a part of life, so it makes sense, but what goes up must come down, you guys. It was obvious that we were reaching an inflection point as we crossed all-time highs in most equity indices. So it was only a matter of time, and we saw it. Okay, so let's break this down from a technical perspective. All right, so on the daily time frames, the S&P, the SPX did officially break through this line of what was support. So you can see here, it did set this downtrend, or this kind of uptrend, but on the downside. May 13th, we have another one on June 29th, and it did just today break below this. So it has officially broken the line of support on a daily candle. That's very bearish. That is very bearish, you guys. What I expect to happen personally is, again, I've said this many times, when you see a pullback after a significant rally, it's not crazy to see it bounce off of where it set previous highs. So you can see it set this high here on June 8th before a correction. So we set that high. I wouldn't be surprised at all now that it's broken this line of resistance. I would say tomorrow we'll probably see another red day. We'll probably come down to this area. After we hit this previous high, I think it's likely that we will bounce up. But ultimately, I do think that we'll come down to this line, like right around the 3,000 even area. And we'll zoom out now. We'll actually go to the weekly time frames because I want to show you what these orange lines are on the outside, okay? So what I expect to happen, you guys, again, when you see a rally, it's not crazy to see pullbacks to previous highs, okay? So this high, this was the ultimate high in the S&P just in July of 2019. So just a year ago, we're at 3,000. And again, we have blown past that now, but I think we will see a pullback back to areas just around, like definitely around these levels right here. So from like 2950 to 3,000, you can see we set two highs up here in September of 2018 and April of 2019. There's definitely some resistance around this area, and just always TA 101, you guys. What was previous resistance is new support. So it would make perfect sense for me now that we have broken this uptrend. We've broken the significant line of support on this uptrend of this relief rally. I think it's very likely that we will see a pullback to the $2,950 to $3,000 region in the S&P, okay? And again, you guys, it might not be straight down. What goes up must come down. What goes down must come up. That's just the game. So don't expect it to just go straight down, although times have been so volatile that I wouldn't be surprised to see it tank. And always remember this, you guys. I've learned this the hard way many times. Things go down a lot faster than they go up, all right? When there's blood in the water, the sharks come, and I mean, things fall. Just to sum this up, things fall a lot faster than they climb, okay? Remember that, you guys. That's why I'm especially hesitant right now on the progress of the S&P, and do think that we could see a significant correction. So the orange lines, I just talked about this in my, I believe, my Friday video, my trading week recap video. we're playing out a megaphone right now, you guys, and I'm sure you can understand why this is called a megaphone. This big, these two orange lines right here. Okay, so from January of 2018, this is the uptrend and this is the downtrend. Okay, so a lot of traders are looking at this right now. It wouldn't surprise me, just considering the economy is so bleak right now. The economic reality is so bad, and I'm sure none of you can disagree with that, to be completely honest, or at least no rational individual can disagree with the fact that the economy sucks right now. It wouldn't surprise me at all, especially with all the new retail traders in this space, to see a pullback down to like these levels over here. Okay, so that would complete the megaphone pattern, and maybe after we complete this, we will start the rally back up. Because once again, you guys, I want to reiterate, I'm not long-term bearish on the stock market. I just think that it needs to catch up with the economy, okay, at least for a year or two. Okay, so this also coincides, this orange line right here also coincides with what I've been saying for a long time, in the fact that we could pull back to, once again, what was a previous high in 2015. So ultimate high from 2015 to 2016, there's a lot of resistance around this area. And remember, you guys, it used it as support. Once again, what was resistance will become support, and that would perfectly coincide with this megaphone if we came down and retested these previous highs of 2015 and came down and tested like the $2,000 level. Okay, so that's a significant pullback, but the economy is in shambles right now, you guys. You have to remember that. So this honestly wouldn't surprise me at all. I probably will hold some put options, some S&P put options, until we do reach these levels, because I do think that at some point in the near future, especially with the election coming up, you guys watch the will the 2020 election crash the stock market video that I posted last week. This was before we even saw a pullback, but there's so many principles in there that apply to the pullback we're seeing now. Okay, so I will ask you guys, and I do think it will do you some good from a knowledge perspective if you go watch that video, but I definitely wouldn't be surprised if we see if we do see this megaphone play out. Okay, so put options on the S&P, you guys. Once again, I just wanted to give you guys my take on the trajectory of the S&P. I do think it's going to go down, obviously, and that's why I have put options. If you guys aren't familiar with put options, there's a lot of great free content out there on that. I do have a Robinhood options trading program if you guys want to check it out, but again, I recommend you guys go look at all the free content you can if you aren't familiar with what put options are yet. Okay, so that is the S&P. Let's take a look at this. Okay, so Goldman Sachs' Wall Street's fear gauge is flashing a warning sign unseen since the dot-com crash in 2000. And I've been hearing that a lot, guys, amongst a lot of veteran traders, that this is very reminiscent of the 2000 dot-com bubble. And this, again, you guys, this is so evidently a bubble. Goldman Sachs said Wall Street's most popular fear gauge is flashing a warning sign not seen since the bursting of the dot-com bubble in 2000. Normally, when the stock market rises, volatility tends to subside. But Goldman said this pattern has been upended as both the S&P 500 and the VIX index have currently hit record peaks in correlation to each other. Strong volatility in tech stocks and investor concerns over the U.S. election results are key factors pushing the volatility index higher, analysts wrote in a note added September 3rd. Okay, so again, you guys, when I tell my newsletter, I tell you guys this all the time. When there's blood in the water, VIXY is a shark that's just waiting to come eat that up. So the VIX was literally built. The VIX as a platform, the volatility index was built for hard times like this, for when the markets see volatility. Okay, it's a direct hedge to the equity markets. Okay, and that's what we'll read here. Okay, so portfolio hedging. One of the biggest risks to an equity portfolio is a broad market decline. The VIX index has had a historically strong inverse relationship with the S&P 500 index. Consequently, a long exposure to volatility may offset an adverse impact of failing stock prices. Market participants should consider the time frame and characteristics associated with the VIX futures and options to determine the utility of such a hedge. And you guys would know, I've talked about this multiple times. I've had the VIX in my portfolio exactly as this, as a hedge, because if equities choose to take a turn, which they are right now, then the VIX thrives off that. Okay, so it's inversely correlated. That means it acts opposite to whatever the equity markets, the S&P specifically, do. Okay, so that's why I've been a fan of VIX. I have been adding to my position slightly over the course of almost this entire this dead cat bounce, this relief rally, whatever you call it, that we've been seeing since March. I have been increasing my VIX position just because I'm confident in it. And again, you guys, you can't actually trade the VIX. I personally trade an asset called the VIXY. So it's an ETF that trades the VIX, so on like just traditional exchanges. So you guys can buy VIXY stock, you guys can buy VIXY call options. Once again, if you want to know my exact positions, check out the complete portfolio, but you guys check it out for yourself. VIXY, I'm very bullish on VIXY specifically right now. Long short volatility. VIX futures provide a pure play on the level of expected volatility. Expressing a long or short sentiment may involve buying or selling VIX futures. Alternatively, VIX options may provide similar means to position a portfolio for potential increase or decrease in anticipated volatility. So volatility, you guys, I should have said this at the beginning, but volatility means rapid movements up or down. Volatility can happen up or down. It just means rapid swings in the market. And that's what we're seeing right now, you guys. You can see it. Like, this literally looks like a lightning bolt. Every time I talk about the VIX in the newsletter, in the portfolio, I use a lightning bolt, the lightning bolt emoji to kind of go with it. And that's because it's kind of what it looks like. And that's what we're seeing right now, just a bunch of lightning bolts everywhere. And again, you guys, I do think, especially as we near the election, there's just so much damn uncertainty out just in the ether right now, and that does scare me in regard to the markets, obviously, and because there's so much new retail interest that has driven this rally. Okay, I mean, just today, Tesla. I will make a video. I'm posting it back to back. I'm recording a Tesla video. The Tesla bubble finally popped. Luckily, I was positioned well. Again, if you guys have been watching, you know that I shorted Tesla last week. That did super well today, obviously, but Tesla down over 20% today. That just shows you what can happen when there's all these like, I feel really bad for the Moon Boys that I do tease, but it's just, again, you guys, I was Moon Boy at one point. I know what it's like to be a new trader. I remember what it's like. And the fact that there's so many of those, like a ridiculous, unprecedented amount of those in the ecosystem right now, that's what makes me the most scared. That's a single factor that makes me the most scared about the equity markets right now, is that there's so much new money who doesn't understand how to stomach loss and will panic sell out of a position if given the right circumstances, which is what's happening right now, in my opinion. We're gonna see some blood. And again, you guys, things fall significantly faster than they go up. That said, VIX will do well. I don't think the S&P is going to do too well, but I think the VIX will do well. So let's go here. One thing I want to let you guys know about the VIXY is that, and again, I saw some of you comment about this, and I was very happy that you guys brought this up. The VIXY, ETFs like that, and like some of the ETFs I personally trade within the SPX, they're leveraged ETFs, and almost all ETFs or derivatives that you trade will degrade over time. Okay, so some of these, some of the ETFs that you'll ever see, like, they could be way up a few years back, but that's just how they're designed. That's just kind of the dynamic of ETFs and derivatives, is that they decline over time. So just keep that in mind. Be careful there, but that doesn't mean that there can't still be upside in those ETFs. Okay, so what I'm seeing here, we will go back to the daily. It's a little more digestible on the daily. So what I am seeing here is, I mean, I think we're going to see a slingshot. It's what's called a slingshot. I'm not going to describe that now, but a slingshot pattern play out in the VIXY right now. So this also kind of prescribes to, or goes along the lines of the two-wave theory. If you guys have been around, you know I have the two-wave theory. It's happened time and time again over the course of this rally. You see a significant move up. So when stocks crashed back in March, you see the VIX spike, okay? And that makes perfect sense. You see the VIX spike when everything else is tanking. This was peak volatility. And then since the rally, like since we've seen a rally in the equity markets, you've seen the VIX taper off. And with some highs and lows, obviously, nothing goes straight down, nothing goes straight up. You guys know the deal. But it's tapered off a lot. You see the bubble pop. You see you see a pullback, capitulation where it goes sideways, and then you see wave two. So I think we are initiating wave two right now on the VIX. I do think that we will ultimately see all-time highs in the VIX, and not the VIXY, but I do think that the VIXY will do significantly, like very well, obviously, because it does hold pretty direct correlation to the VIX for the most part. But in terms of the VIX, I do think that we'll see it come up. It does have to break out of this lowering trend line, lowering line of resistance that's set for itself, but I don't think that'll be an issue. Again, you guys, with the elections coming up, volatility is the one thing I'm super confident will do well in this market. This is the most confident I am almost in any of my plays. I can say with a pretty good amount of confidence in itself, but I do think that we will have to break out of this line of resistance for me to be super bullish, be even more bullish than I am now on it. Again, you guys, I think that's inevitable. I think it will happen. And once we break out of that, I think it's a clear shot back up to probably not quite all-time highs, but I think we'll get pretty up there. Again, you guys, so I'm long the VIX. I'm very confident in the VIX. Again, you guys, VIXY is a specific stock I play. Go check it out if you want to. But there's not much else to say there. I just wanted to put these to your attention, you guys, especially the VIX, because this isn't a very highly played trade out there. But again, it's one of the trades that I'm most bullish on right now, and I wanted to share it with you guys. So, I mean, hopefully you go do more research. That you guys know the deal. Not investment advice. Always do your own research. Always establish your own conclusions, because again, you guys, this is just my opinion. I do have my biases. I don't know exactly what's going to play out, but I'm confident that there is some blood in the water right now, and that trend will continue. And we're just kind of kicking off some of the like the greater pullback that I do believe we will see. Okay, so we'll call it there, guys. Once again, do go check this out. I feel like the puts I had in place last week. You guys, if you saw some of the puts I laid out last week, I mean, you might have caught on to that wave. Always do your own. Like, this is not investment advice either. I'm not guaranteeing anything here. But again, it's like videos like today. Like, I'm just putting things to your attention. This is exactly what I'm doing with my portfolio. And it's looking pretty good, especially going into this week when I think there's going to be some more carnage ahead. So first link in the description if you're interested. Again, along with that, I do send out a newsletter that looks like that. I'm not going to show you guys the whole thing just out of respect for my subscribers, obviously. But this is the beginning. Talk about every trade I made that day, rationalizing my thoughts, and give you guys my overall thoughts on the general markets. Okay, so I do send this out during market hours on trading days, every trading day. So again, check this out if you want to. If not, no worries. And once again, as always, drop a comment down below. Let me know what you think. Let me know what you're shorting right now. If you're shorting anything, let me know what you think about the VIX. If you've been in the VIX for a while, or if you just learned about it, because I always love learning from you guys. I always love getting feedback from you guys, and I look forward to talking to you guys down there. All right, so as always, take action, make waves. Peace.